Will they or won't they? That's the question that traders are asking this morning after comments and a speech from US Federal Reserve Chair Janet Yellen on Friday night indicated that although the Fed believed the data had strengthened recently, any future decisions would still be very data dependent. And although Fed President Fischer later came out and in a speech to media talked about the idea that the Fed was ready to go and that the possibility of a September rate hike was very live, he also reiterated that data dependence. And so that's why our calendar watch is so important in the current environment. It's very clear that the numbers that are released are going to determine whether or not the US Federal Reserve starts lifting rates. That, of course, has implications for every market and every central bank, every economy around the globe. So bear that in mind as we look through the data this week. We do have a major read this week that could inform the Fed's decision. But turning to the calendar, you can see with all levels of importance selected that it's going to be a very busy week in data. And we certainly can't cover every single release in this short introduction to the week, but a couple of the highlights of the medium and lower importance. You'll notice we've got retail sales in Germany coming out tonight, could be very important for ECB, and also as a read on activity in Europe's largest economy. We'll then have CPI data coming out on Tuesday night. Also their retail sales in the US, also on Tuesday night our time, could also be very important. Looking at the others, we'll see New Zealand business confidence numbers this week, new home sales numbers in Australia, as well as some private sector credit data. Moving on through, you can see we've also got those very important weekly petroleum status reads. Very important, of course, to the outlook for crude. In New Zealand, we'll see trade indices, merchandise exports and imports in terms of trade. In Australia, we'll see the AIG manufacturing index, and that, of course, will drop on Thursday our time. Other data coming through, you can see we've got planned approvals, we've got minor employment reads in the US, and then we'll see weekly natural gas and cars and trucks data out of the US. But if I use the filter now to drill down to the most important releases for the week, you can see that there are a number that traders are likely to be focusing in on. And the first of those comes tomorrow night with the consumer confidence data out of the EU, a very important part of the EU economy. Any surprises there or any pickup from that very weak read previously at minus 7.9 could be a confidence booster for continental shares. We'll then see the CPI out of Germany on Tuesday night, as well as we touched on. Industrial production numbers out of Japan on Wednesday could also be very important. We've been looking for life in the manufacturing sector in particular, but across industry in Japan, any signs of life there will speak directly to the future actions of both the Bank of Japan and the Abe government. House prices in the UK, also an important read. Employment data in Germany on Wednesday night, as well as CPI data for the European region, could mean that Wednesday night is a focus for traders, particularly those actively involved in the DAX. We've touched on the weekly petroleum data due Wednesday night, the retail sales numbers coming out in Australia, as well as some CapEx numbers. But the big read this week is here, the US non-farm payrolls. We know that it's a strength in employment in particular that has caught the Fed's eye. If we see any signs that that strength in employment and the strength in consumer activity that we saw in data on Friday night is starting to flow through into prices or into wages, then we're almost certain to get a rate rise. So at this stage, expectations for the read this month, fairly modest after last week's monster read of 255,000 new jobs, only looking for, at this stage, 164,000 new jobs for the month. Of course, a number higher than that will have markets anticipating a rate rise sooner rather than later. A couple of quick charts to look at before we go. Naturally, higher US rates means a higher US dollar in almost all textbooks and in almost all markets. And the dollar-yen pair is a very interesting one to look at, not least because we've now got a pretty solid floor, pretty solid support here around the 100 yen mark. You can see that just below that level we've had a number of bounces. It does appear that we've now got a good support in place. Now we've clearly got a downtrend here, as you can see, and if I draw that in, one of the issues with this downtrend is where it's correctly drawn. Here's the high, and if we cut through some tops, you could argue that it has already bounced out. If not, you might prefer this style of trend line cutting down through here. Nonetheless, we're still close to that downtrend line. So any further strength and a move up to 105 would be suggesting that we've seen not only a breaking of the downtrend, but a potential uptrend for the US dollar against the yen forming. And the other key chart for local traders this week will be the Australia 200 index. We've just coming to the end of the reporting season. As you can see, during this season, and I'm going to zoom in on it, during this season the market has essentially been trapped between 5,500 and 5,560. And if I just draw those in, you can see how dramatic it has been over the last little while. Here's the 5,500 mark, just shy, and here's the top side. And you can see that for the last 16 days or so, every close has been in that region of 5,500 to 5,560. This is a very narrow trading band. It's unusual behaviour. And with the end of the reporting season, the potential for the return of the large institutional investors to the market, there's real potential for this market to break out. As you can see at the moment, breaking down to the downside, and any sustained move, and in fact a close below that 5,500 level, will start to suggest that the next move for the Australian share market index could well be down. Of course, any reversion through the day and a bust out through the top, and let's face it, a 1.5% range is not a big ask for the Australia 200 index, and we'll see a more positive outlook. But the key, of course, is these two lines in the sand. The break, once it's sustained in one direction or the other, will likely set the direction for the Australian share market.